So the day, I don't like the first class because I'm really eager to get into the material, but the day we'll do the class overview so you know what to expect. And then I want to do something related to the markets because it's pretty important we get that on day one. So let me first show you how I have Canvas. I'm getting a little better at Canvas. So you have the syllabus, and we'll go through the syllabus, and you have class notes. So class notes are very important. You should read the class notes before class, and I'll give you some hints on some things you can do. And then we have modules. So we have an introductory section for a few classes, the first couple of pages. And then we're going to get into module 2, which is a big chunk of this class, which is essentially exam 1. Exam 1 is a massive exam, very unusual versus our second exam will be very normal, but the first exams can be fairly unusual. We're going to be working on it. I'm going to do my best to help you learn the materials so you can get it into the exam in a really intelligent way. So we're spending quite a bit of time there. There's 20 something pages on that. Then we'll get into some just markets, how markets work, how you trade, expenses, those kind of things. We'll talk about return and risk and then get into valuation. Talk a little bit about construction and then spin up the end on derivatives. I'm a huge fan of derivatives. That's why my stock portfolio had a positive return in 08 because we had options, and the options saved us a lot of money when the markets crashed. So they're really powerful things. So we'll finish up with that. You do have some papers, and so I have some files that help you with the papers. We have 4 papers. Papers 1 and 2 are independent papers. 3 and 4 is one paper, written as one paper, but it's got 2 major sections. So I do give you examples of prior classes on paper 1. I don't for the other papers. I don't like giving examples on paper 1 because some students, they just take the example paper and they just update it for current numbers, and it's so boring to read. So I'm not giving you example papers so you can copy someone else's paper and just update the numbers. You should write your own stuff. But I'll give them to you so you can see the format and how it should look. We'll get into that a little bit. Looking at the syllabus, so we have 2 exams and 4 papers. That's 50% and 50% of the grade. I do count attendance. Why do I do that? So some students hate that. That's why I do it. Because what I've discovered, it's not 100% correlation, but it's in the 90s, probably 91.6 or something. It's pretty high correlation. That students that don't come to class are generally not engaged students. A lot of times they're in the wrong major and they're bored, so they don't want to come to class. That's pretty sad. You probably should change majors. Sometimes it's just because COVID has gotten people in the habit, not even forget about coming to school and not even going to work. So we've kind of got this new transition. But that's fine. Pick a class that doesn't require you to come to class and go to that class. I believe in coming to class. We're spending all this money, taxpayer money, in these buildings. You need to come to class because networking is extremely important. And when you think of networking, a lot of people think networking is, you know, your father's best friend works at some company and those kind of things. You should ask people 10 years into their career what their most important network is. It's going to be the people they met in college. I have a good friend who started a hedge fund in New York, and I asked him, what's your most important network? And he says, oh, it's all my buddies in college. So this is where you create your network. That's why we're going to do some team exercises so you can get to know some people in your teams and get to know. You should actually be pretty aggressive in that. In a new class, go in and talk to people, meet people. You know, go to someone who's on a different row and say, hey, you've been in this class a few weeks, just curious who you are, what are you doing? You know, get to know people, expand that network. If you start a hedge fund in 15 years, you may be calling people in this room, say, hey, you want to invest $1 million in my hedge fund? I just got it started. They'll probably say no, but at least you have someone you can call and just see if they might be interested. So I do include participation and attendance. Attendance is the main thing. You can add points with attendance. You can miss so many classes that I'll just kick you out of the class. So if you miss 7 or 8 classes, but there's like 25 classes in the semester. So if you miss 5 classes, that's 20% of the classes. So if you don't think that's a big deal, try it in your first job. Skip 1 day a week without telling them and just don't come in and say, I didn't feel like coming in, and see how long that lasts. So going to class to me is as important as going to work. In fact, to me, it's kind of the most basic thing. Showing up is kind of the step one to success, isn't it? You can't show up, then the rest is kind of moot. You'll never get there. I realize parking's a hassle. Universities make it really horrible. I went to UT Austin. You think parking's bad here? I used to go to class at 5 a.m. just so I could get a park. I was a trumpet player. I was a music major, so I get there at 5 a.m. and practice in the mornings. And people were so happy when I left. There were like 6 cars fighting over me to get my parking spot. So I know that's a tough thing, but that's part of, adulthood, is figuring out how to get your life to work. So I do require attendance. Nice thing about attendance is it helps you build your network. It also helps me learn your name. And I do references all the time for students and jobs. And if I don't know who you are, I can't be a very good reference. So I got to learn your names. And hopefully, if I do a reference for Diego, I'll remember which Diego it is. So you might have to give me your last name too. But I do remember I had an employer call me a couple weeks ago, and a student I hadn't seen in 6 years. But I knew his name. He did a great job in the class, and I gave a really good reference because I remember who he was. If I don't remember you, I can't do it. During COVID, it was really tough. There were some students, the first time I met them is when we took a photo for graduation. I had never seen them before because I hated COVID because I didn't know who these students were. I knew their papers, but I didn't know their faces. So it was hard for me to keep track. So attendance helps me learn who you are. I'm part of your network as well, right? So if you do well in the class, I'll fight for you to get jobs. And I've had great success getting students jobs. There's a few employers that I'm the only source of their employment because they hire like 2 or 3 people a year, and they don't want to mess with HR and all that kind of stuff. So they just call me. I send them 10 names, and they hire people. So I can be a good conduit for you for a job. If you fail the class, maybe not, but if you make an A+ in the class, do well, then yeah. And then the easiest thing is just do the course survey at the end. You get 1%. So that's the layout of the class. Any questions just on where we're going? So you can see where things are due. The first thing to do is that is due is paper 1. So paper 1's not due until March. We'll talk about paper 1 today. And then exam 1 is not until March. So the grades are somewhat backloaded. So it's kind of unfortunate because if you're really not doing well, you're not going to know until March, but that's just the way I've designed the class. So paper 1, you shouldn't write it February 29th. You should be writing it. Well, you can't write it yet because you don't have the data yet. You won't have the data for, I guess 2 weeks. You'll have the data. Yeah, in February 2nd, I think. I'll look. So you can't really start it until then, but then you should start. These papers are papers that normally on a job, you would write them in an hour before your boss gets to work on that day. I'm giving you several weeks, but normally you do it in an hour. So I'm giving you a lot of time to kind of get more data and work on it. But generally, all 4 of these papers are papers you would do in a normal job, in an investment job. So they're not unusual, strange papers. They're very, very normal types of papers. So what should you do right now? Since you can't start on paper 1, you should be reading the class notes, and I'll talk about how you can do that in a powerful way. But any questions up to there? On attendance, you can have free makeups on attendance. I won't count attendance today, but I'll start counting it on Monday. So if you have to miss 3 classes, you can watch the YouTube video and send me your class notes, and you get credit for 3. After 3, you start losing points for attendance. So if you're here every class and maybe you miss 2 and you send me notes and you get 100% attendance, you get the bonus. If you're here every class but 4, you make up 3, then you can't get the bonus, but you don't lose points. At some point, you start losing points. So you can essentially miss 4 or 5 classes and it not hurt your grade, but it won't help your grade. So that's, to me, a lot more lenient than your bosses are going to be. I heard a professor last night saying, I don't care if you come to class or not. I don't really, he's like, no, that's just not my model. If I'm going to be here, you should be here. I have a little easier time parking than you do, but it's still a pain to find parking. So, come up here and interact. help me get to know you. I don't have an office. I do, but I don't know where it is, but I'm always in the Financial Studies Center. If you don't know where that is, then you better find out really quickly because it's really important that you know. Some of y'all know, right? Because you have accounts. I mean, Sebastian kind of lives down there. You really should be living down there. It's where the Bloomberg machines are. You can interact with much of the finance majors. It's a really, really impressive room, but it's on the first floor of the business building, bottom of the stairs to the right there. So I'll be in there. I'm there most afternoons, except for when I have a class. So before this class on Monday, Wednesdays, and then between my classes on Tuesday and Thursdays. But I'm usually here before the class. And then if you email me or call me, I can set up other time. You can actually, my office hours are almost 24/7. I'm on a bike every single morning. And if you want to call and talk careers or talk to class, if you don't mind me panting as I'm going up a hill, then I'll talk to you. I've had several conversations on the bike on careers. I got this job offer, I'm not sure about it. So if you want to call me, that's fine. I'll probably be on the bike. I was on a bike yesterday. It was painful and horrible, but every day. So you're welcome to call me. Weekends are fine. You can call me. So set up a time. Some students are really scared of writing papers. And the best time to figure out if you have a horrible paper is before it's due, not after it's due. So if you're really worried about writing, then set up a Zoom session with me, send me your paper, and I'll give you feedback. I don't like giving feedback by email because it takes me a long time to type an email. So if you send me your paper, I'll give you really high level. And essentially what I'll say is it's not a disaster. Or if you have a disaster on this paragraph you need to fix. But if you want detailed feedback, set up a Zoom. You can even record the Zoom and let me talk as fast as I talk. And then you can see all the problems we have, and then you can go back and fix those things. Writing's really, really critical in finance. You need to become a really good writer, and I'll give you some examples of that. And I'll show you some examples of where students are really, really bad at writing. So it's really, really critical. I wrote a lot at UTSA. A lot of white papers where I'm trying to say radically change this company. I have to convince people, so I have to document it all. You've got to be a good communicator, a good writer. I wasn't when I started, but my first boss's boss in finance, he had a PhD in economics, but he also had a degree in English. He was the greatest writer. I remember walking to his office with 3 pages. He'd rip it out of my hand and start marking it all up. He'd get the 3 pages down to 2 paragraphs, and he would say more in 2 paragraphs than I said in 3 pages. Really, really effective communicator. That's what you've got to work for. So my office hours, anytime, just if you can't find a time when I'm there, then just email me and we'll find a time. I want y'all to be successful, so I'm willing to put in the time. Don't turn in your first paper thinking it's a disaster. Don't find it out on the grading. Some students are like, I think it's a disaster. I'm going to be real embarrassed if I call them. I mean, I'm going to see it's a disaster either before I grade it or after I grade it, so you might as well get the embarrassment out, right? We need to take the chance of being someone telling us, you can do better than that or whatever. So just take the chance, but do it before the paper's due. Once the paper's due, I can't go back and say, you really need to fix all this stuff because then it's too late. So get it done early and meet with me if you're worried at all about it. All right, let's talk a little bit about the papers. So let me give you could start kind of thinking ahead on the paper. If you wanted to read some stuff and get some. So what I want to do, since we're talking about markets, is get you in the habit of following economic kind of factors, reports. And the most important economic number that comes out is the jobs report. So you should, from now and the rest of your life, the first Friday of every month, you should be jumping out of bed in the morning to go see the jobs report. It should become the habit for you. It still is for me. I've been retired for 14 years. And I still, the first Friday of the month, it's like, okay, how did the jobs report do today? Do you think President Biden is interested in that number, especially the next 6 months? You think Trump is interested? He probably wants a bad number. Biden wants a good number. right? It's a pretty important number. It has a huge impact on elections. One right before the election has a huge impact on elections. So Trump's going to be hoping for a horrible number. I'm assuming those two. Who knows if they're still alive in November? But if it's those two, then yeah, Trump's going to be hoping for a horrible number in October. Biden's going to be hoping for a great number in October. It's an extremely important number. But do you think stock markets and bond markets react to this number? I hope they do. For your paper, I hope we get a massive report so you have something interesting to write about. So it comes out. The jobs report comes out generally the first Friday of every month. Not always. It kind of depends on the date. But this month it comes out February 2nd. February 2nd will be the jobs report for January. So what do you know about the jobs report? Well, I told you there's two numbers that are really important. What do you think those two numbers are in the jobs report?
Job created.
I think you said, what did you say?
The jobs created.
Jobs created. Okay, the number of jobs, right? What would be an average number there? We need some choices. 20,000, 200,000, 2 million. What would be the most likely number? 200,000, right? 20,000 would be a horrible number. 2 million would be, I don't think we've ever had, even coming out of COVID, I don't think we were at 2 million. So typically for us to have, for you to have jobs, we need to be hiring about 200,000 people a month. That's kind of the norm. So 200 is kind of a normal number. All right, so what's the second number? So jobs created, unemployment rate, the rate. All right. Which of those two numbers is adjusted after the fact? Which one of them never changes and which ones do they revise the next month? Guesses on that? So the number of jobs can be changed dramatically. The unemployment rate, that 3.7%, whatever, that doesn't change. That's when it's reported, it's there. All right, so one of them is called the household survey. Which one of them is a house? I've been part of the household survey. Which one of them is that? Is that number of jobs or the rate? Y'all know on that? So that one's the rate, the percentage. So it's called a household survey because they call houses. So I got a letter from the Department of Labor asking, do you want to be part of the household survey? And I said, well, of course I do. And so I've been doing that for the last few years. They still call me today. And now I'm kind of on like a 3-year rotation. I was there every month. So the guy comes by and they're adamant. If you're on the list, they will talk to you. You feel like they're stalking you because they're not going to give up until they get you. They'll leave notes, they'll call, whatever. And so I got to know this guy because he's just every month I would see him. And he comes to my house and he says, did you work last week? And if I say no, then I'll ask, did you want to work last week? Now, if I say I didn't want to work last week, I'm retired. Am I unemployed or not? I didn't work last week and I didn't want to work last week.
No, you're not.
I'm not unemployed. So what am I not in? I'm not in the labor force. Y'all know the participation rate? That's the percentage of people that are in the job. So if I say I didn't want to work last week, I'm not in the participation rate. I'm not participating in the job rate. If I tell them I didn't want to work, I didn't work last week, but I wanted to work, am I in the unemployment rate? Then yes. Yeah, then I am. All right. If I tell them I did want to work last week and I did work last week, then I'm just employed. All right. So if we have 3% unemployment, I'd be in the 97% better than. Now it got confusing for me in the summer because they asked, did you work last week? And I said, well, no, I'm a college professor. I don't teach in the summer. He said, did you want to work last week? And I said, and so it got really confusing. So to me, I was still employed. I was just on vacation. So I don't know. I might have messed up his report. They ask a lot of other questions. Some of them are incredibly personal. Some of them are strange, like, do you have a basement? Like, I'm in Texas, of course I have a basement. But just wild questions. Some of them were like on mental health questions. And so it got, there's complete strangers asking these questions. But that's how they do it. They get it's a survey, it's a sample size, pretty large sample size. And the Department of Labor is adamant that if you're on the sample, you must be asked because they have to have the statistics. They can't have people jumping in and jumping out of the sample. So the number of jobs that they call companies, and they ask companies how many people they're hiring. So very, very different approaches. The number of jobs is a little bit skewed toward large companies. The unemployment rate can be more small companies because they're calling households. Which do you think, and think about this carefully, because you might be surprised, which of those numbers do you think markets are more sensitive to, that they react more to? The number of jobs or the percentage unemployed? What would you think? Number of jobs, or I would probably think unemployment rate, but because that's usually the headline you see in CNN, but it is the number of jobs. They're much more focused on the number of jobs than on the unemployment rate. So why that is, maybe because it's more trustworthy, because you call companies. I don't know, it's hard to say, but that's the number that's more important, but they are both important. So those are the two most important ones. What's another important number that I just mentioned? Participation rate. That's pretty important, right? It's possible the unemployment rate went up like from 3.6 to 3.7. That sounds bad, but if participation rate went up, you might be okay. It might be the unemployment rate went up because a lot of people are more encouraged and they're starting to look for jobs. So now they are looking for a job. So now they're in the job labor force, but they haven't gotten a job yet. So the unemployment rate goes up because more people are coming back into the jobs. So you have to watch the two numbers and kind of guess what's going on with these numbers. What do you think the markets might be really interested in today, given what happened in 2022? What else is in that number? What were we worried about in 2022? Inflation, so wage inflation. That might be a number we're looking at. The jobs reports inflation number is not as important as some of the others, but there is a job inflation number. They also have hours worked, which is important because that influences our productivity numbers. So there's a lot in that number that is interesting. Not everything is interesting. So in your paper, you'll definitely talk about the number of jobs. You'll definitely talk about the percentage unemployed. You'll definitely do participation rate. You'll probably do private jobs. So there's 4 or 5 that you always do. There's some numbers you may not do. So it kind of depends. I can't tell you in advance because it depends on what happened. All right. So when the report comes out, we'll see how the market reacts, see how big of a number it is. Right now, so let's see what y'all had economics, right? And you've had macroeconomics. So when your macroeconomics professor said soft landing, what was she talking about? What's a soft landing?
Like small.
So the economy's not real strong growth, but it's not what? Not a recession. So a soft landing means economic growth 1-2%. It's positive, but not a recession. Why would we want a soft landing? Because the Fed's trying to do what? Control inflation. How did they do that? They raise what rates? Which interest rates? Fed rate, which is what kind of interest rate? The short-term, intermediate, long-term. So short-term rates. They influence short-term rates. Do they influence longer-term rates? Have y'all heard of QE? What is QE? Anybody? Quantitative easing. So what did I do with QE? They started buying longer-term bonds to do what? To try to influence longer-term interest rates. Now we're doing, I forgot what they called the opposite of QE, but so they bought all these bonds. Now they're not selling them, but they're letting them all mature. So they bought all these treasuries to try to get rates to go lower. Now they're letting these mature, so rates are going to go higher. So now they have influence not just on the short end. QE is pretty amazing. With normal Fed policy, so you studied this in economics class, normally they're increasing Fed funds rate, which is short end, but they don't have much control on the long end until QE when they started buying mortgages and treasuries. So it's been pretty fascinating what the Fed's been doing the last few years. Pretty unusual. Money and banking, you probably talked about that as well. Money and banking is a pretty critical class because you as a finance person, you need to understand when the Federal Reserve does something, it impacts bonds and impacts stocks. You've got to be involved in that, understanding what they're doing and why they're doing it. So the Fed's raising rates to try to slow the economy down to try to get inflation lower. Normally, when they do that, we get a recession. And that's what everybody was saying at the beginning of 2023. And then suddenly, November, December, everybody's saying, no, we're not going to have a recession. We're going to have a soft landing. And then suddenly everybody was happy. And then January came, and what do they think? Oh, maybe it's not so great. Maybe we will have a recession. Maybe the Fed's going to keep raising, so how do they decide that? By looking at that employment report is probably the most important. They also look at the consumer price index, which is that's not the most important inflation number. Have y'all heard, what did your econ class say the most important inflation number was? Y'all talk about the GDP deflator, that number, y'all remember that? And so the Fed follows other inflation numbers. There's several inflation numbers out there, but the Fed follows the CPI. Y'all know the difference between CPI and core CPI? Y'all learn that? What's not in core CPI that's in CPI? The two things you can't live without.
Energy and food.
Energy and food. Why do they leave those out?
Everyone needs them.
Huh?
Everyone
needs them. So how does that influence inflation? A couple of ways. First, they're very volatile because inflation came down a bunch last year, but why? Because energy prices fell a bunch last year. So that's one reason they're really volatile. But the second reason is, exactly that. You have to have them. So if food prices go up, that may actually be deflationary because you have to buy food so you can cut back on other things. So it may actually cut prices everywhere. So they do it with and without those. Right now, core inflation is staying persistently high, and CPI has been coming down because energy prices have been coming down. So those are the kind of things you need to kind of reflect on. You're not doing a report on inflation, but you might look at the last inflation report to give some context to your paper. There is another release that comes out that week that can be important. It's the ISM. It may not be important. It may be tricky this time because ISM usually comes out on Wednesday, but given that February 2nd is a Friday, I'm not sure exactly how the ISM will come out. There's other reports that come out during the week. So you can look and see. I'll give you a little link down here. I don't like this calendar because it doesn't let you go back in time. It's kind of irritating. But if you click on view the full calendar, you can see what's coming up. I don't see any big reports this week. Well, retail sales was actually a pretty big deal this week. Retail sales came out. Industrial production can be important. We're not as big of a manufacturing country as we used to be, so it's not as big a report, but it can be an important report. Inventories can be important, so there are some interesting reports out this week. The beige book can be important. The beige book is essentially the Federal Reserve telling you why they're doing things. It's kind of like their minutes, their meetings. Housing starts can be important. Jobless claims comes out the day before the jobs report. The nice thing about jobless claims is it's more current than the jobs report. So the jobless claims is how many people filed for unemployment this last week. So it's like a week more current data than the jobs report. So that can be important. You should go back and look at that report when COVID hit. That report looks like this, and then suddenly it just goes off. And I think the highest number we ever had was a few 100,000, and I think we hit 7 million in 1 month with COVID. It's like completely off the charts. So these reports were really, really impacted. There's a manufacturing index, but only the Philadelphia one. Nothing real big this Friday. Consumer sentiment, I don't know which one that is. There's 2 of them, but that can be important, kind of depending on what comes out. A lot of times these reports are ignored by the markets unless they surprise in some way. The ISM is a really good one. It's the manufacturing sector. If the ISM, if it's above 50, that means the economy is expected to do well. If it's below 50, it's kind of slow. If it's below 43, we have a recession. That report, the market usually ignores unless it surprises. Like if the market is expecting 52 and you get 48, the market can react to that. So you can see there's a lot of these. If I were you, I would want to know which economic numbers are most important to markets. Anybody have a guess what economists think the most important economic indicators are? How would you figure that out? Is there an indicator that includes a lot of market indicators, economic indicators in it that you could go look at? GDP is what this thing is predicting. The problem with GDP is important, but the problem with GDP is kind of late. It comes out really late. And so most of the stuff in the GDP report we already know, but it is an important number. But this is something that forecasts. Let me give you the initials. LEI. The E stands for what? Economic. Leading economic indicators. What is the LEI? The LEI are the leading indicators that the best economists in the world say are the best predictors of the US economy 3 months, 6 months out. Do you think you want to know those indicators? If the greatest economists in the world think those are the best ones, it comes out by the Conference Board. Now, how many indicators are there? There's leading indicators. What else might there be? Lagging. And then what's the last one? You can be ahead, you can be behind, or you can be where? Coincident, same time. What do you think the jobs report is? It's a lagging indicator, right? Exactly. Why is that? Because when we go into recession, firms don't fire people immediately. We have the recession and they kind of wait, and then they start. And then when we recover, they don't start hiring people back immediately. They kind of wait to see how it's going to be. So jobs actually peak after the recession, or so it's a lagging. So what would be a leading indicator? You can read about it. Well, here's the number right now. There's a year-over-year change. You can see one of the most important leading economic indicators is the yield curve. Y'all know what the yield curve is, right? You'll study that. We'll talk about the yield curve here. What does the yield curve tell you? So I'm trying to, my goal in college is always comprehension, retention, and application. I think we fell on retention. So I don't know what classes y'all took last semester, but could any of y'all write a 50-page paper over what you learned last semester without looking at any notes? No. No? Why not? What did you do last semester? Did you get your money's worth last semester? Did you write a long-term paper? Who was your most important professor last semester? I would say it was you. You're your most important teacher. So it's not your professor's job to teach you. It's up to you to teach yourself. So you should be desperate, not just to learn material, but figure out how to retain it. How do you retain this stuff? So you don't waste 3 months of your life sitting in a class. How do you retain this? And there are secrets to how to do it. One thing is take notes by hand, not on computer. That helps a lot. I did that in college, and it's amazing to me how much of my college I remember, and that was 30 years ago, but I remember a lot of my college because I took hand notes, and then I went home every day and recopied all of my notes. And if there's an error in my notes or I can't figure it out, I use that as an excuse to go talk to the professor. And think how much retention that created. It's pretty phenomenal. I had some great professors too that helped. But yeah, so how do you get the retention? Another way to do retention when you read the class notes is as you read, stop and make up exam questions as you go and try to answer them without looking back at the notes. So quizzing yourself constantly. I'm going to try to do it in this class if I can with some multiple choice, kind of clicking kind of thing. But the more you quiz yourself, the more you can do. I was trying to learn all 196 countries in the world where they're located because the Economist talks about countries. I was having a tough time remembering them, and then I found an online quiz. I started doing that, and in 2 weeks, I know what all 196 countries are. I know where Togo is. Y'all know where Togo is? I know where Bahrain is. Y'all know where Bahrain is? Anybody? I know where every country is in the world. And it took me 2 weeks. Why? Because I quiz myself every day. So constant quizzing is another way of doing it. What doesn't work? Rereading notes is actually hurts you. Reading textbooks hurts you. And why is that? Because you read it and say, I know this, when you don't know it. It helps a lot if you're doing multiple choice exams. Guess how many multiple choice exams you'll get in this class? 0, because that's not how you learn. So you got to find ways for retention. And I'm going to try to help you as much as I can with retention. I'm going to be giving you some pneumatics and some other things. There's one thing we do in this class. It's called DC cuts I. I had a student from this class. I hadn't seen him in 5 years. I go, Anthony, DC cuts I. He goes, duration, convexity, credit. He did the entire list. 5 years later. That's pretty good, right? So retention. All right, I forgot where I was going to go with this, but the yield curve. So what did you learn from your economics class? So here's the yield curve. What is the yield curve? It's all the treasuries at different maturities. What should the normal yield curve look like? Let's go back to a normal one. No, that's not normal. What is that? How does that yield curve look? What word might you use for that yield curve? Long-term rates are high, but short-term rates are really low. And long-term rates aren't all that high. I mean, that's a 2% treasury. Treasury today are a lot higher than 2%. So I wouldn't use high because it doesn't, they look pretty low. What's another word? It starts with an S. Does that help? Huh? Steep or skewed? Not skewed, but I said it. It's steep. This is a steep yield curve. What does a steep yield curve tell you in the leading economic indicators? Well, long-term rates are a lot higher than short-term rates. Is the market positive for economic growth or negative? Steep yield curve is very positive. Why? Because they expect rates to rise in the future because of a strong economy, maybe some inflation. So steep yield curve is very positive. I don't know if I can find you a really good. There's 09. There's a more normal yield curve right there. How do we know what normal is? So the best way to think about it, this is how I remember it, and I think this is the way the Fed does it. Look at the 10-year versus the 2-year. And I think it's the way the leading economic indicators do. Look at the 10-year rate versus the 2-year rate. The normal difference in those is about 0.7. So if the 2 years at 3%, the 10 years should be at 3.7. That's normal. If you're a lot higher than 0.7, then it's steep. If you're a lot lower, then it's either flat. So what is it today? That doesn't look steep, does it? So what word do we use for that? Inverted, right? So you can have normal at 0.7. You can have flat where it's almost the same. You can have steep where the 10 years like at 2 or 4% and 2 years at 1% or something really steep. You can have flat or you can have inverted. Today we have inverted. The 10-year is at, well, this is a couple of days ago, but right around 4%. But the 2-year is at 4.1. So it's negative slope, right? What is the market telling you when you have an inverted yield curve? Is that positive or negative? Negative. And that's one of the leading economic indicators, an inverted yield curve. As I say, the inverted yield curve has predicted 11 of our last 9 recessions. So sometimes it's wrong, but we've never had a recession without one. We've had some inverted yield curves without a recession. That's what people are hoping today. The soft landing, we're gonna have an inverted yield curve without a recession. All right. These are all kinds of factors you could bring into this first paper because it's an economic one. But the conference board, there's a place you can find a list of the indicators. Let's see if this is it. I mean, I would start there, right? I mean, you can't do much better than the best economists in the world. If they think these are the ones, then are you going to come up with something better? Maybe, but I would start with that. Start with what the experts are saying. So, so this first paper is focus on the jobs report, but you can bring other things in. I've had some students go back and look at the last consumer price index. Maybe that was 2 weeks ago. So you got to be careful on this first paper. Essentially, the scenario is your boss calls in, she's driving into work on her cell phone. My boss used to do this, irritated the life out of me, always on his phone. There's one time he did that and I'm like, oh, I can't believe this. And he's like walking up behind me with his phone. I was like, oh, hi, what's how you doing? But he's constantly calling on his cell phone. And she says, hey, I got a meeting with the CEO at 9:30. The jobs report's out today. I don't have time to mess with it. I need a summary of it on my desk when I get there. And it's 9:25, right? So that's the way it works. So maybe it's 8 o'clock. You got an hour to write it. I'm giving you much more time than that. But your goal is to figure out how to tell her what she needs to know so she sounds like a genius when she meets with the CEO. That's your goal, right? So you're trying to say what's important. Not everything is important. If you give her a lot of, it's like, healthcare added 2,000 jobs last month. And she's like, why do I care about that? 2,000 jobs. But you might say travel and leisure lost 40,000 jobs. Well, that might be important. What's going on with travel and leisure? Why did that happen? So you got to find what's important. You're not going to find that by reading the student examples from previous classes because they had a completely different set of numbers. All right, so come up with your own stuff. I give you a few other places. Another place you can go, which is, to me, is even better, is get a Bloomberg account in the FSC. And when you get a Bloomberg account and log in, you just type ECO, and the Bloomberg will bring up all the economic indicators. And they'll give you all kinds of links. When it comes up, you click on the link and it's link after link after link. And it's really a wonderful source. And it does look really good in a college paper to put a Bloomberg chart into your paper. They're not the prettiest charts because they're not formatted all that great, but in a college paper, Bloomberg charts look good because you show that you know how to use Bloomberg. So that's a really effective approach. Here's another. So I'll give you some websites you can use. This one will not let you go back and look at reports from previous months. I wish they would. When you click to go back, they ask you to buy a subscription to their site. And I have a tough time finding. I know this guy at Bloomberg.com used to have that report and they stopped showing it. So it's hard to find it and go back and show you previous ones. So you can't work on this yet, but if you want to start thinking ahead, you certainly could. Let me show you an example paper. All right, so you're all on LinkedIn, I assume. One thing you got to get on LinkedIn is a portfolio. And I don't know where your portfolio is. You'll have papers out there. Part of the problem with multiple choice exams is you're unlikely to put up a multiple choice exam on LinkedIn. So, hey, I made an 87 on this multiple choice. I answered C on number 7. That's not going to help your employer much at all. The 4 papers for this class are perfect for LinkedIn. But you got to make them look like a professional paper and not like a college paper. So what does a college paper look like? It's one column, it's double space, which is the worst. Never double space the rest of your life. Why do college students use double space? You get more pages. That's not your goal. Your goal is not. What did my boss do when I went in with 3 pages? He cut it to 2 paragraphs. Right? There's a famous saying, I forgot who said it, said I would have written a shorter paper, but I ran out of paper. I ran out of time. Your first draft should be your longest draft, and you should be cutting it back. Get rid of superfluous information. So you got to make it look professional. So how do you make it look professional? I like this format. One of my students started doing this years ago, and I said, that looks pretty good. Where'd it go? I don't know if it opened it yet or not. I don't see it. So where did he get this format? What he did, he went to the Financial Analyst Journal, which I'll put all my old Financial Analyst Journals into the FSC. And he said, what does a professional journal look like for a paper? So it starts off with a title that says what he's going to do. Has an abstract, and the abstract can be 1 or 2 things. It can be, this is what I'm doing in this paper, or it can be a quick summary of what the paper says. One of those 2 could be. It kind of depends on the paper and what you're going to do. So an abstract, I like the abstract kind of like that, but he used full justified, but that's fine, but italicized. Good use of titles. I thought it was pretty cool. He did the big T. That's kind of tough to do, but you can try it. It's a little tricky. Why did you do that? Because that's what was in the journal. Any of y'all be embarrassed to have a paper look like that on your LinkedIn? Does that look unprofessional or does that look pretty professional? Looks pretty good, doesn't it? When you do 2 columns, you've got to make sure your margins are really narrow. If you use 1-inch margin, it looks like a college paper. You gotta have narrow margins, otherwise everything's just squished together.
Did you put the T in a text box?
Yeah.
I can't remember exactly how I did it. It might be a picture that I can't remember.
Okay.
But the papers are out there. You could somewhat kind of copy what he did. This isn't his paper. This is another student's. Quotes. If you have a quote that's like 3 words, you can put it in a paragraph. If you have a quote that goes more than a line, you need to separate it out, italicize it, and center it. Right? Quotes need to be broken out like that. It doesn't look really professional to do it like that. It looks a lot better. Use of bolding, bring out key points, because remember your boss is sitting there with the CEO and she's going to kind of be looking at your paper to bring things out, but you need to bring out those most important things. So that's good. How many lines is this paragraph? 1, 2, 3, 4, 5, 6 lines. One of the things that looks horrible in a college paper are 15, 20 line paragraphs. Just looks horrible. Your brain cannot. I had one student turn in, I think it was a 6-page paper and it's 1 paragraph. It's like, I don't read. If I get papers like that, I actually create my own paragraphs because you can't read that much stuff. You could have a 3-line paragraph. If you're changing topics, go to a new paragraph, right? This isn't Hemingway, although I think Hemingway had short paragraphs. You know, you're not trying to write the next great novel. You're trying to communicate to your boss. Short paragraphs is what you need so that you don't get lost. One thing I do count off on critical writing skills is if you can give me the information in 1 sentence, don't take 3 paragraphs. It amazes me. Let's see how he did. Number of jobs added for the month of January is 156, which was later revised and changed to 157. The consensus, so he took an entire paragraph to say that. I think he could have said that in 1 sentence in half the time. I have students take 3 paragraphs, 1 sentence. Jobs came out at 227. The market was expecting 300, so we missed, but we were better than last month's 67, all in 1 sentence. All right, you don't need a bunch of paragraphs. So you try to get it shorter and shorter and shorter, so you relay the information as much as better as you can, as short as possible. You have some graphs, some charts. This isn't a very good graph because it's not well labeled, so make sure you have a well labeled graph. You can use pop-out boxes with arrows if you want to. So one thing you don't want your boss to, I mean, she's sitting there with the CEO, you got this graph, and she's going, okay, what is this graph telling me? That's not what you want your boss to. So we want your boss to say, hey, look what happened. Look what's happened since COVID. And you put an arrow in COVID and today and see great improvement since COVID, something like that. You make it really obvious. The best way you make it obvious why the graph is there, and Andrew, I don't know if you remember this from our class, but the title of the graph should explain why the graph is in your paper. So if you're trying to show great improvement in employment last month or back to pre-COVID levels, whatever, put that in your title. That way your boss knows, oh, that's the reason you put that graph there. One of the professors here, he's an eco professor. He works for the Federal Reserve, just retired. He counts off. If you have a graph and your title doesn't say why you put the graph in there, he counts off. I'm not quite that strict, but you know, you shouldn't make it obvious why you put the graph there. I don't even know what this graph is for. It probably tells it in the comments, but that's not perfect. I'm sorry? Have what? Yeah, I'm not sure what the labels are. This is probably the unemployment rate. So he should have titled that. So he says below is, but you should still put it on the graph, right? I mean, think about your boss looking at the graph. You think she wants to read a paragraph to figure out what the graph is saying? Probably not. That's not going to be good use of her time. Private payrolls, you will definitely talk about private payrolls. So you have private payrolls, and you have total payrolls. Payrolls that are total include government jobs. I remember one jobs report it was a negative number, and the market's initial reaction was really negative. And then they noticed the overall number was negative, but private payrolls was positive as the market came back because governments were cutting so many jobs, especially teacher jobs. They were just cutting jobs everywhere. And the market says, not that the market's like, we don't care about teacher jobs, but they were saying, the governments are cutting back. They're going to hire those people back once the economy comes back. So, those are pretty safe jobs. They hire them back pretty quickly. And private's doing well, so they interpret it as a positive report. So private payrolls are important. Here he did put a chart in there showing the market's reaction. Talk about the participation rate, good use of titles, good use of quotes. Why are quotes important? Well, your boss just hired you. You just graduated. Is she interested in your opinions? Yeah, kind of, but really, probably not. She more wants you to go find what the experts are saying. So, what is the big bond guru saying? What's the big, what's Bill Miller saying at Legg Mason? What did the Fed say? What's Jerome Powell say? Get a quote in there. What are these people saying? Now, when you use articles, when you quote articles, who writes articles? Finance people? No, it's journalists. What do journalists know about finance? Surprising, very little. I got called a lot for interviews from CNN, from Bloomberg, all these kind of people. It was irritating to me because they already had the article written. They had a quote. They just had to figure out who said it. So they call me and say, Ron, do you think? And they would say their quote. If I say yes, I'm quoted. If I say no, they hang up and they go find someone else. That's how they write their articles. I mean, it's crazy. And a lot of them don't really know what they're talking about. So you need to hear experts. How do you find experts? To me, the best place is to go to Bloomberg and click news or click AV, because they'll have interviews, and Bloomberg is really, really good about interviewing experts in the field. The news will give you articles from experts. So you want experts. So if you go to Yahoo Finance or CNN, these are people who are not finance people. What is their goal? I'm not saying they're not smart people. They're very smart people. What is their goal? They want one thing more than anything else.
Tell an interesting story.
They want clicks, right? They want eyeballs. They want clicks. You don't get clicks by telling the truth. You get clicks by exaggerating the truth. So their goal is to get people to read the article. So you're after the truth, not after fluff and hyperbole. All right. All right, let's talk. So we'll get in this paper once the report comes out. Let's finish up with one last thing. Any questions up to there? You really can't start the paper yet other than just maybe research. I do recommend all of you get the Bloomberg Market Concepts. Any of y'all done that yet? Have you done that yet?
I'm sorry.
We're starting it. Oh, so Bloomberg Market Concepts, you can do that for free. You don't have to be here. You can do it from home. Have you done it? Yeah, you finished the whole thing?
Yeah.
All right, that's great. You can put it on your resume, right? That looks really impressive. It's really powerful, isn't it? A good report.
Is that a book? What is that?
So Bloomberg Market Concepts, you go to the UTSA library, go to databases, and look for B for Bloomberg. You click on it, get an account, and you can do it from home. I recommend you do it here. The best way to do it is watch the videos while you have Bloomberg open. And you can't open Bloomberg from home, but you can. Did you do it from home or did you do it up
I
here?
did it from home.
From home. Yeah, there's times you wish you could go click on the Bloomberg machine and look, and you can only do that from here. But you can do it from home. As long as you go through your utsa.edu account, it's free. So we're paying for it, and it looks great. It takes quite a while, right? It's pretty lengthy. But I did it like in 3 months, just during breakfast every morning for 30 minutes. So, but you can put it on your resume, Bloomberg Market Concepts. It looks really impressive, and you learn quite a bit of stuff that's really quite valuable. What I think is really impressive is when freshmen and sophomores do it, because they're seeing stuff before they see it in their classes. It gives them a huge, huge advantage in their classes. So
I still have the articles for them.
Huh?
With like the test question, I saw the Bloomberg Market Conference class.
oh, well, yeah, someone was teaching it, but yeah, they were just kind of giving a summary, but yeah. All right, so one thing I want to do, I used not to do this because I assumed all finance majors knew this, and then I discovered very few finance majors know this. is how do you talk about markets? So yesterday's market, this is the S&P 500. That's a stock index. When you hear the word index, what it means is it's a reference point, the consumer price index. It's an index. So you have 100 as a starting point, index off of it. All right. This is not a dollar amount. The S&P 500 is not worth $4,700. It's just an index. It's a price index. There's no dividends. It's a price index. Now, Dow Jones is an index. The NASDAQ is an index. Russell is an index. But what about crude oil prices? That's actually a price, isn't it? That's $71. When you talk about a price, you use dollars. When you talk about an index, you don't use dollars. You don't say the S&P was down $17 today. That you say that in the interview, they're going to look at you funny. How many of you want them looking at you funny in an interview? Probably not. What do you want to sound like in an interview? A college student or a 5-year professional? Probably like the professional, right? You don't say the S&P was down $17. That just sounds bizarre. But you can say oil prices were down 47 cents. Okay. What about gold? Is that an index?
I'm sorry, so how do you say that the S&P was down?
I'm gonna give you the phrase. I'm gonna give you a phrase. We're gonna actually have a team competition on that next week. What about gold? Is that an index or is that a dollar amount? That's a dollar amount. Can we say gold was down $1.20?
Yes.
Yes. Silver, the same way. I won't talk about currencies. Now, the 10-year bond, this is where students struggle the most. The 10-year bond yesterday closed at 4.66%. And there's a green number here that should be red. What is that green number? What is 11.116? Anybody know this one yet? It's a point. What's the best way to say that? All right, so that's 11.6 basis points. Have y'all heard basis points before? That's 11.6 basis points. The 10-year treasury was up 11.6 basis points. Why do we say basis points? Why don't we say the yield was up 2.94%? All right, so this is really critical. You're talking about an interest rate. You don't talk about an interest rate changing by 1% because it's really confusing. All right. You say the 10-year treasury is up 2.94%. Your boss is going to freak out. You mean interest rates shot up to 7%? Oh, no. They went from 3.6 the 3.96 to 4.07. If you say they're up 11 basis points, she'll know exactly what you're talking about. All right. So if you're talking about 1%, you use basis points. You'll see that on paper too when we talk about margins. When you say the gross margin was up 10 basis points, you don't say the gross margin was up 20%. Why? Because the gross margin is 1%. All right. So when we're talking about 1%, you use basis points. The 10-year treasury yield was up 11.6 basis points. All right.
How are those basis points calculated?
All right. So one basis point is 1/10,000th. All right, so 100 basis points is 1%. 200 basis points is 2%. What would 50 basis points be? If interest rates were 4% yesterday and they rose 50 basis points today, what would the interest rate be today?
4.05.
That'd be 5 basis points. So 50 basis points would be 4.5%. All right. Here rates rose 11.6. Let's say they rose 12. So that means yesterday the 10-year treasury was 3.94. Today it's 4.06. Went up 12 basis points. All right. So get used to basis points. What if the rate was 4% yesterday and today rates rose 20 basis points? What would be the rate today? 4.2%. All right. What if the rate was 5% yesterday and rates fell 30 basis points today? 4.7, right? Getting really good at basis points. You interview for a job with fixed income. So I get Victory Capital is one of those firms that likes to hire my students. That's a fixed income bond department. They talk in basis points. And you want to talk in basis points. In fact, you don't want to say basis points because you want to sound cool. So you want to say, wow, the 10-year treasury is up 11 bips. You say bips. This is a lot shorter than basis points. They're going to hire you after you say bips. But you just sound like you know what you're talking about. So man, you see the 10-year was up 12 bips today. Yeah, does that sound like a college student? Sounds like a finance professional. 12 bips, 12 basis points. Bips is spelled BPS. The other question is that a big deal or a bad deal? So the treasuries have a good day yesterday or a bad day yesterday? How do bonds do when interest rates rise? What do bond prices do? They fall. So bond prices fell yesterday, but is that a big day or a small day? How would you know that? Well, here's a way you can know that. Oh, where did I put it? Oh no, where am I? Sorry, system's really slow today. So I'll give you a secret. So when you go into interviews, I'll give you a secret that can really help you. So I brought in the S&P 500 back to 1927. I decided to stop there. I don't think the S&P existed in 1927, but somehow someone got data back to 1927. Then I got the daily return. And then I got the 10-year treasury back to 1962. Right? I wasn't alive then, but quickly afterwards I was. So, right. So that's almost my birth year, 1962. And then I have it changing in basis points. It went from 4.06 to 4.03, so it fell 3 basis points. All right. So what you need to know when you go on an interview, what is a big day for the stock market? Well, what did your stats class tell you is a good way to measure whether something's a big move or not? What stat did you use? Standard deviation, exactly. So what is the standard deviation of the daily stock market? Back to 1928, it's 1.2%. So a 1% day on the market is a pretty big day. A 2% is almost a 2 sigma event, so that's a pretty big day. A 3% is huge. 4 and 5%, you're getting almost to impossibility. Now, October 87, when it fell 23%, that's absolutely impossible. That can't happen. It happened, but it can't happen according to statistics. So keep 1% in your mind. A 1% day is essentially pretty close to 1 sigma event for the S&P 500. But for treasuries, one standard deviation event for treasuries is 6.5 basis points. All right, remember that 6.5. So what happened yesterday? Rates rose 11.6 basis points. Was that a big day yesterday?
Yes.
Yeah, that was a really big day yesterday.
So what exactly is basis points measured?
It's interest rates, but the reason we say that, let's say we went from 4 to 4.5. The percentage change was 12.5%. But if you tell your boss, hey, the treasuries rose 12.5%, first of all, she has to know what the rate was yesterday. And how many of y'all can do 12.5% in your head? That's pretty tough math, isn't it? But if you tell your boss the treasury is up 50 basis points, she knows exactly what you're talking about. And that's a big day, right? That would be a huge, huge day, 50 basis points. It's just the way bond people talk. They talk in basis points. So if you tell a bond guy the rate was up 12.5%, they really won't know what you're talking about. It'd be really confusing. If you say it's up 12.5%, they might think it went from 4 to 16.5%. That's pretty unlikely, but that's what you could need. When you talk about percents, it's hard to talk about the percentage change in a percent. It's just really confusing. So we use basis points for that. All right, is that clear, Jalen? I don't know if that it's a little confusing. You got to do this on paper 1. You got to talk in basis points. All right.
Did you create this Excel file? Or
Yeah, it took me like 3 minutes. You can get this from Yahoo Finance. You get this one if you just type H15. And it'll bring up the Federal Reserve site and brings you all the historical. The problem with the Federal, it probably took more than 3 minutes because they bring in vacations. So you have to eliminate all the vacations. I don't know why they do that. You get these no data, and I wish they would get rid of that. But yeah, you can do it here. You use the Shift 6 SPX in Yahoo Finance. And over here, you just do H15. You can bring in the data, not just the 10-year. This is the 10-year, but when you do the H15, it brings in the entire yield curve. I just deleted everything but the 10-year. So like if you want to look at the 10-year versus the 2-year, which would be a great thing to do, and do the difference, You could do that real quickly using the age 15. Some people use the 10 versus the 1 because there's more history on the 1 year than on the 2 years, so you kind of see what data you have. So 1% change in the stock market would be a big day, 6.5 basis points. So you can see yesterday was a really big down day for treasuries. So if you're going into an interview yesterday for a job, that's one thing you would definitely want to bring up. And you want to get ahead of the curve, right? You're walking in, you want to say, wow, do y'all see the bond market today? That's what a professional is like. All right. You want to get them thinking that you're in the right career, you're in the right field, you're excited about this kind of stuff. Very, very important. So we'll do this again on Monday and practice with this. And then on Wednesday, we'll have our first team competition. So I'm going to put y'all in teams.